Right, welcome back, traders. This is Trade Your Way. So, just having a look at gold. On Friday, we posted a video and analysis saying that we were looking for the move up on gold, looking at ideally 1920, targeting 1920 being a key area in terms of supply and demand zone. There's a key area up here which is highlighted with the purple. Also we had the 76.4, which is a key fib which we always target, being the last major resistance or fib resistance that we find before we have a full retrace 100%. So it was a good area to target. We had all week been bullish on gold, bullish bias, kept buying, so we got good money made on this move up. Just trying to test that 61.8, sold off from the 50 exact, and then made some money again, pushing it back up as a double top to retest. This time took a long couple of times actually, and got some good money as it touched the 61.8. Then we were done. Then we were waiting, we had the pullback, and we were waiting for this move to develop so that we could buy this back up for yet another go to the upside, and for a third time, and maybe then third time test 1913, 1914, so $1,914, and break it, and then go back up and test the previous structure up here, which is also the area where we had the record high sort of 10 years ago, with the last 10 plus years ago with the last recession. 1921 was the record high, which has just been broken this year, so that's a key area of interest. Price has been respecting it at the moment in terms of resistance. We keep bouncing off it and dropping back down, which you can see here. This is a 4-hour time frame, you can see that. So we had our trend line here. What we're saying here regarding our entry, so the entry was great. What let us down was the stop loss. The stop loss was just way too tight. We didn't want to risk too much. We wanted to see if it was going to just hold here and then go up, and it looked good initially, but then it failed, stopped us out, and then even here for good measure, this candle during the Asian session, you can see a liquidity grab. It's spiked down. It's stopped anyone who's had any ideas about going long. Stopped them all out if their stop was just below the previous low. You can see it's just made a new low, stabbed down. Liquidity grab, because it needs a liquidity in order for it to go up. So it's a trading recap really, as an idea that we had, as a trade that we took. We did lose on it, and we didn't risk more than 1% on this trade because it was the end of the day on Friday, and market just wasn't really conforming to what we wanted to see. There was no volume in the market, so the idea was right. Perhaps we could have done a couple of things better, namely a better entry perhaps, although I was quite happy with the entry being around $1,900. Could we have made put a slightly bigger stop? Yes, could have done that better. Could we have been perhaps a little more patient, thinking that this would go up? Yeah, could have done that as well. So I just sort of share that with you because sometimes that's what happens. Even though everything lines up and everything is perfectly looking really, really good for a nice bullish move, bouncing off that trend line support as well, and round number. And 1902 has proven to be a really good place to enter for some good money, good pips. Time and time again, you can see the way it's bouncing off here and using it as resistance there. But then when it broke up through, we were buying it back up. So we bought it there, and also we were trying to do the same thing there. But unfortunately, on this occasion, it wasn't to be. But yeah, I thought I'd share that with you because it's really good to see sometimes how best laid plans. You've got your trade plan, you've got your ideas, but then you want to go back and journalise it and say what could we have done different, better, tweaked, etc. Hope that helps.